Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of June 17th through June 21st, where we'll try to help you make money trading in the summer. So, again, thank you for joining us for part one of our weekly trading game plan for June 17th through June 21st. And again, we'll try to help you make money trading in the summer. So, let's get started. Apologize to anyone who's waiting in the chat for the slight delay. While StreamYard wouldn't let me go live, kept saying it was highly or unexpectedly high traffic, but I'm glad we got started. So thank you all for joining us. So again, here's our Google document with our notes for part one of our weekly trading game plan for June 17th through June 21st. We keep our notes in publicly accessible Google Documents. Our notes documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas, and you can find a direct link to this Google document in the description box below. Again, we store all of our weekly trading game plan notes, Google Documents, in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks, and you can also find a direct link to that Google Drive folder in the description box below. Good morning, The Crow. Thank you for joining us. Hope you're doing well. So firstly, we'll quickly take a look at how the markets ended up on Friday in the main page on FinViz. We can see the Dow just slightly negative, tried to make it up to break even, didn't quite make it up to break even. NASDAQ broke slightly above break even, positive 0.12. S&P also tried to make break even, didn't quite make it, negative 0.04. But under the covers, we see only 26% advancing, 70% declining, got 41% new highs, 59% new lows. We've only got 46% above their 50-day moving average, 53% below. We've still got 61% above their 200-day, 38% below. But we can see in the heat map, it's pretty much tech-driven, driven by the Magnificent Seven. So that's holding the indices up, whereas almost all the other sectors were in the red. So we'll see this rally, this melt up has been, primarily driven by the Magnificent Seven, by technology, by the AI FOMO with NVIDIA, and also positive earnings from Broadcom and Oracle. Welcome, MD, Easy Mike. Thank you all for joining us today. Hope you all are doing well. The Ricky Khan. So some news, looking at Tesla. See Tesla bounced up on approval of Elon Musk's pay package and retreated again on Friday. Some Hyundai. Goldman Sachs boost to S&P target. Fifth straight record close for the NASDAQ. S&P slips. Ending streak of records. See oil. Oil had tested that 80 resistance level, bounced back down a little bit. Natural gas had broken up over 3, then retreated slightly. So resistance at 3, trying to break out of that 3. Gold, see, slightly broke above that 2350 resistance level, and then you can see it's testing that 2350 resistance level, getting rejected right now. See the Dow futures pointing down, S&P pointing down, and Russell severely negative. And we'll talk about the impacts of some of the economic data and the Fed interest rate decision from June, particularly on small caps. So Russell, NASDAQ pointing up. Dollar strengthened a bit on some of the economic news and the interest rate decision. Bitcoin down a little bit, 66K. And we saw a real significant retreat in bond yields, now down in the 4.2s, 4.35. So down from 4.5, significantly retreated today. So or this week. So bond yields down, bond prices up, and we'll see that also in the futures. Still got a slight inversion between the 5s and the 10s. Welcome, Alan Krantz. Thank you for joining us. Hope you're doing well. So if we look at the major indices, Again, you can find these links in the notes and also in the screener sheets of our ETFs and Watchlist Google Sheets. So see, the Dow was actually pretty flat, did get a little bit of a pop up on the lighter than expected CPI data that we'll see. Also, we had slightly lighter than expected PPI data. So the Dow got a little bit of a pop, hit that upper trend line, pretty much rejected back down, headed back down to that lower trend line. So the Dow's been, generally pretty flat. We can see the moving average looks like it's rolling over a little bit. Again, IWM got an initial gap up, broke out of that moving average, but then very quickly retreated back down, broke down below the moving average, down below the lower trend line. So a lot of weakness in the Russell. Again, we'll talk about the lack of Fed interest rate cuts and that pressure that it applies to the small caps, the Russells. Again, exuberance in the Magnificent Seven, mega cap techs, Qs broke out of that upper trend line, gapped up, headed up, got a strong upward trend in the Qs, less so in the SPYs, but again, driven mostly by the Magnificent Seven, mega cap tech. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So again, we'll see this in the technology components, mostly driven by, the FANGs, the Magnificent Seven, big gap up, trending up, broke out of that previously, upward trend, very, very strong, exuberant jump. SOXL, very similar, so not quite as exuberant, but still broke out of that double top, that multiple top, gapped up. A new upward trend, so very exuberant positive trend in the semiconductors. Again, positive earnings from Broadcom, Oracle, etc. TQQQ is going to follow the Qs, so very similar there. We don't see participation as strongly in ARK. Again, still pretty flat, just kind of oscillating around that lower trend line. Got a downwardly trending long-term moving average. So again, ARK just not participating in the technology exuberance. Similarly with biotech, short gap up, but then a very quick retracement back down to the moving average. So it slightly broke out of that upper trend line, very quickly retraced back to the moving average. Very tightening wedge there. So again, biotech not generally participating as strongly. Again, broad technology, very driven by Microsoft, Apple, NVIDIA, etc. So again, a strong tech rally, had pretty exuberant reactions. We'll see if we get a correction, a retracement in some of those areas. FANGs made new 52-week high, TECL made new 52-week high, SOXL, TQQQ, etc. Okay. So let me grab a quick drink and we'll go over the groups, the sectors, the industries from this week. Okay, so if we look at the groups of sectors and industries on the groups tab on FinBiz, we see Friday was all, technology, all Mag 7. Otherwise, relatively defensive. Industrials made a significant retracement. Energy's been still somewhat weak. A number of basic materials, although I think silver did bounce back up a little bit. For the whole week, technology, communication services did get a little bit of a bounce in real estate due to the retracement in bond yields, mortgage rates, etc. So they got a little bit of a bounce, but then again retraced slightly back on Friday. So again, it's all been technology, communication services, all the Mag 7s, mega cap tech. Again, energy, basic materials, utilities, industrials, weak for the month. Again, quarter, technology, communication services. Again, utilities had been strong, and again, we saw a correction this month. Energy's been weak all around, even though oil's retesting that 80 level. So not a whole lot of industries. Got some mining. Again, semiconductors strong. Some REITs. Silver got a rebound. Gold slight rebound. Copper a little bit on Friday. Other REITs slightly weak. A lot of the other basic materials relatively weak. So steel. Other real estate relatively weak. The worst performers, solar. So again, solar was very volatile. Reacted positively to the lighter than expected CPI data, assuming rates would come down. Then we got the decision from Powell of only one rate cut probable this year. So, and they corrected back down very strongly. Some REITs were pretty negative. Utilities, some oil and gas. One I did want to look at from Friday specifically is uranium. I looked at several of the stocks that we typically watch in the uranium sector, like DNN, LEU, UEC, UROI. So we see all these uranium stocks are coming down from their previous high. They're still relatively high on a 52-week basis. But I am watching several of these. UROI, I like around 2. LEU, near its 52-week low in the 30s. DNN, significantly lower. Even CCJ, probably the most popular. It looks like it's coming down to a pivot point around 50. So again, we're watching those uranium stocks, looking for opportunities. But again, they're still relatively high from a 52-week basis. But again, you might find some opportunities, short-term traders, day traders, scalpers, for a bounce in uranium after that significant correction. So just one I wanted to specifically point out that I'm keeping an eye on. So for the week, again, semiconductors, electronics, hardware, that's probably Apple. Again, initially the WWDC announcements of their AI stuff not received terribly excitedly, exuberantly, but then analysts figured out that it'll probably drive a new upgrade cycle in Apple, and Apple had a nice positive run for the week. So again, that's probably what's driving some of this consumer electronics, computer hardware. Some of the REITs were positive. Again, we've seen a retreat in bond yields. Gold generally negative, silver significantly negative, uranium, copper. So again, basic materials have retreated quite a bit. Steel. For the month, solar was very positive, semiconductors very positive. Silver, copper. So again, basic materials pretty weak. For the quarter, utilities were good. Semiconductors, solar positive for the month. Silver, had a strong run, retreated somewhat. We'll see in the futures. Uranium had a strong quarter. Again, we see that retracement. Gold, similarly. Weakest for some real estate, pharmaceuticals, some basic materials, some REITs, oil and gas, etc. So I hope that all helps. Welcome aboard to Be Free. Thank you for joining us. Hope you're doing well. Okay, so I'll open up the calendar from investing.com, go over some of my notes from the highlights from the economic data that we got this week, and then we'll look at the economic data for next week as well. Just a quick reminder is I try to capture the important economic data as quickly as possible and post it in a Surf the Markets channel in our Discord that I'll show you in a second. Again, our Discord is free to join. We would encourage and welcome you to join our Discord. You can find a link in the notes as well as in the description box below. So again, as the important economic data comes out, I try to capture typically a snapshot image from investing.com along with the raw data, any additional important news. So again, great way to get real-time economic data is by joining our Discord and watching the Surf the Markets channel. So I hope that helps. So just some of the highlights in my notes. So we didn't get much Monday, Tuesday. Wednesday, we got mortgage rates had dropped somewhat. Mortgage market improved slightly. Refinancing going up again. Mortgage rates slightly down. As the 10-year continues to go down, that'll help with the housing market, mortgage rates, etc. Then we got CPI data. Is a little bit lighter than expected. So core was 0.2 versus 0.3 expected. Month on month was flat, so no inflation in the CPI. Month on month, year on year, slightly less than expected, 3.3 versus 3.4. And so we saw, a pretty exuberant positive reaction in the market to that lighter than expected CPI data. Then we got the Fed interest rate decision and their SEP, their dot plot, their economic projections. So we see their decision was nothing, no cut, no hike, as pretty well expected, as we talked about last week, and we looked at the probabilities last week. We do see their interest rate projection for Q2 is a little higher than previous. Flat for the second year, current 5.1, so higher than previous, and longer term it went up as well, so higher for longer is the general message. And some notes out of the FOMC statement. They're only projecting now one cut for 24 versus previously they had said 3. So previously they had projected 3. Now they went down to 1. Just a note, I think the market, didn't react as negatively to that due to the positive CPI data as I think they would have if the CPI had come in as expected or higher. So we didn't get a strong negative reaction, although that was a significant dial back in the interest rate cuts from 3 down to 1. So we, as we'll see. The number of participants, quite a few are saying none. So 4 out of 19 officials said no cut. 7 said 1 cut, and 8 still saw 2 cuts. So nobody said 3 anymore. So definitely a dial back in rate cuts. Now the majority, are saying 0 to 1. Again, they upped their estimate for inflation from 2.6 to 2.8. And they did note, they're making, progress on inflation, but it's just slower than they probably expected. So a couple comments from the press conference. It was pretty much, as expected. They need more confidence. They need more data. They like that the inflation seems to have been moderating very recently, but they need to see more data before they're willing to cut. So inflation's eased substantially, but still too high, and they don't have to worry about the jobs market. Unemployment still remains low. So again, no hurry, no rush to cut. And Powell did specifically say, if they got a shock in the employment market or in the economy of GDP, suddenly significantly decline, then they'd be prepared to cut quicker. But again, they want more data, more confidence, more time. So in my humble opinion, I don't expect them to cut anytime soon. Again, all of our content should be considered, not considered financial advice. We're not financial advisors. All of our content should be considered for education and hopefully some entertainment value only. Then Thursday, we got PPI data and jobless claims data. So we see producer inflation also slightly less than expected, so flat for ex-food, transportation, etc. Only 2.2 year on year. and it was actually negative for month on month. So actually some disinflation on the front end of the supply chain. So again, very positive from an inflation battle against inflation. So again, the Fed will like that. But again, I expect they want to see more data. And we also got jobless claims, initial higher than expected, continuing higher than expected, um, average a little bit up as well. So the job market is slowly weakening, but not a major shock that would cause the Fed to move imminently. Friday, then we got, so again, the market reacts very positive to that light PPI data. And then, Friday, we got Michigan sentiment data, which was a little bit weaker than expected. So the consumer's not feeling quite as well. They're expecting higher than previous inflation. So their 5-year inflation expectations went up to 3.1, and their overall expectations and sentiment, degraded. So again, and this was one of the comments that was made in several news shows, and I think in the press conferences, the data, CPI, PPI, inflation data says inflation's coming down, but the consumer's not seeing it, and they're not feeling good about inflation, good about the economy. Again, unemployment's going up a little bit, so a weakening consumer, but inflation, slowly coming down. So let me grab a drink in a second, and we'll look at the rest of the data in investing.com and the data for next week. Just a quick reminder is that the stock markets are closed on Wednesday for the observance of the Juneteenth National Independence Day. So again, markets are closed on Wednesday. Thursday is the first day of official day of summer, thus our theme for making money trading in the summer. And again, we don't get another FOMC meeting until the very end of July, and we get another dot plot SEP in September. So let me grab a drink, and we'll look at the rest of the economic calendar from last week and also for next week. Welcome, Hamster One. Thank you for joining us. Hope you're doing well. Okay, Monday, we got some built bond auctions, went okay. Got employment trends, a little up, so that's probably positive. Tuesday, business optimism up a little bit. Crude oil stocks down more than expected. And again, we did see the price test 80 again. Mortgage rates we talked about down a little bit. Talked about CPI. There's real earnings is positive, slightly positive. Gasoline inventories up. Talked about the Fed interest rate decision, their projections. Talked about PPI and jobless claims on Thursday. And we've got Fed officials already starting to speak, so we'll hear, who thinks we still need 2 or more, or who thinks we need none in 24. Starting to hear more people say they don't expect any in 24. We did see, if I go back to some of the comments, we did see that they upped their projection for 25 from 1 to 3. So again, less than the total previously, but increases the number of cuts in 25. So we're more likely to get more cuts in 25. Baker Hughes rig count dropped, overall rig count dropped. So again, we saw oil prices go up to about 80 or so. Look at the data coming up for next week. We'll get some manufacturing. Manufacturing has been generally weak. We get retail sales. That'll be kind of interesting. It was negative in May, year on year 3%. So we'll see if the retail is weakening. We see the consumer sentiment weakening. Is that going to show up in retail data? Industrial production. So we'll see, is manufacturing industrial weakening? And we get Fed officials talking. Again, markets are closed on Wednesday. Mortgage data, building, construction data. So we'll see if the lower mortgage rates are helping the housing market. We'll get weekly jobless claims data. Home sales, Baker Hughes, etc. So not a whole lot of real, market moving, a lot of volatile data coming out next week. See what we've got left for earnings. Earnings season should be wrapping up pretty much. We've got Lazy Boy, Lennar, we've got some home builders. So that'll tell us how the housing market's doing, retailers. Some gold or steel, MSB is a steel company we watch. KB Homes, so it looks like, heavy housing. Kroger's, again, retailers, grocers, CarMax. So again, much lighter. We should be out of the main flow of earnings. Still worth keeping an eye on the calendar, seeing how that would affect any of your trading decisions. And again, you can hear how we trade around earnings, our philosophy, and the video and our notes. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. So now I'll quickly jump over to the market screen in Webull. So again, I'm using the online browser version of Webull. This is the market screen. And if you're not already using Webull, they're still offering a number of promotions right now. And again, you can take advantage of these promotions using our affiliate link in the description box below, and also help support our BeachBum trading community, which we greatly appreciate. Again, they're offering up to 75 free fractional shares of stock if you open an account with 25K or more, or 20 if it's under 25K. They're also offering a 1.25 cash bonus for transfers into Webull of your investments, and a 3.5% bonus if you for contributions to your IRA. So again, if you'd use our affiliate link in the description box below, you can get all of these current promotions and help support our BeachBum trading community. As you can see, we use Webull for our market analysis, our due diligence, the majority of our trading. Again, this is the market screen of the online browser version of Webull. You can see the histogram of advancers and decliners from Friday. So again, even though the indices were pretty much slightly negative to flat, we had a lot more decliners than advancers, and a significant number of significant decliners, large number of small decliners. So we're pretty weak under the covers. We look at the net inflow. It's kind of back to what we saw, a month or so ago. Inflow into the NYSE on Friday, and outflow out of the NASDAQ. You see we had a real steep outflow out of the NASDAQ. So even though we see that exuberant run in the technology components and the Qs, etc., there was a significant outflow of money on Friday, and then just a little bit of a bump up right at market close. But again, a lot of money flowing out of the NASDAQ on Friday. So probably a significant amount of profit taking might indicate, a possible retracement in some of those technology component areas. So it looks like my calendar section got shifted over a little bit, but if you find the calendar section in the market screen in Webull, then you can see the upcoming earnings, also dividends and splits, etc., also economic data. So again, you can keep an eye on who's eminently going to be releasing earnings. Look at the best performing industries for the week. Again, semiconductors, computers, some financial, some fintech. Retailers mostly negative. Software slightly positive. Electronics, communication. Real estate split. Home building pretty positive from last week. Renewable energy mostly negative. Drug retailing mostly negative with some positives. Utilities pretty split. So multi-line negative. Healthcare providers mostly negative. Few positives. Look at the ETFs in Webull. So short the Russell, short small caps. Again, the Fed interest rate decision that they're not going to cut, we're going to have higher for longer, is generally a negative for small caps, negative for the Russell. Again, initially we saw an exuberant pop, but then a quick retracement. Down on the Dow. Looks like mid caps positive. Qs, again, all the exuberance in technology and the Qs right now. Up on the VIX, we did see a slight pop up in the VIX, but nothing too exuberant. Again, short the Russell, short Europe. We'll see this in the futures in a second. Industrials pretty negative. Again, we saw that correction in industrials. Almost all the sectors negative from Friday. Slight positivity in real estate. Again, benefit from lower bond yields. Communication services, again, going to be Mag 7. A little defensive. Basic materials pretty negative. And again, all the positivity in technology. Commodities, looks like a silver, so pointing, recovery, bounce back in silver, all silver. Zero coupons. So let's jump over and look at the futures. Grab a quick drink, and we'll look at the futures in FinViz. Okay, just a quick reminder that you can now also trade futures in Webull, and you can find more information about futures trading in Webull via the link to that message in our Discord. You get the details of how you can trade futures also in Webull. If I go to the futures in FinViz, so again, we see the Dow initially bounced up, had that little bit of a pop up on CPI, light CPI data. But in general, it's pretty flat. Again, it looks like we have rollover in some of the futures. S&P gapped way up, NASDAQ gapped way up. Again, I think this is on the rollover of the futures. Russell flat, however, again, after that initial exuberant reaction to CPI, it retraced very quickly. Now it's flat to down. Nikkei's been flat. The Euro stocks and the DAX. Okay, so Europe, and we'll talk about some ETFs in Europe, but they had the EU parliamentary elections some turmoil there. Then we've got some turmoil in the French elections. And so we got a real negative reaction in the Euro stocks, the DAX, the French CAC, which I haven't been able to find a ETF to trade that directly, but we'll talk about the French ETF that I did find. So again, major negative reaction in Europe. So again, opportunity shorting those, and we do have some shorts for the Euro stocks, EPV. And we saw oil test 80, got rejected. Still trying to test that 80. We'll see if it rolls over again. Again, VIX popped up just a little bit, retraced pretty quickly. So again, not a lot of volatility. Again, natural gas broke above 3, and then retraced, broke back down below 3. So we'll probably get some oscillation around 3. See if it's going to break out. The long-term trend's definitely up. So we'll see if it can break out of that 3 area or if it's going to retrace further. Again, gold got resistance at 2350, breaks slightly above that, retrace slightly down, so consolidating around 2350. We'll see if it breaks up above 2350 and heads back up to 24, or if it's going to break down further to 23 and test that support level. Similarly with silver, bounced up above 30 slightly, then quickly retraced. It's got support at around 29.50 or so, resistance at 30. So again, we'll see if it can break back up above 30 or if it's going to continue down, 29.50, 29, 28. Other metals slightly weak too. Platinum looks like it may have found a near-term bottom, but palladium's been downtrending. Although we'll see in the ETFs, it's not really at a 52-week bottom. It's just relatively low from these charts. I think Douglas PC was pointing out the pop-up in cattle. Corn looked like it made a lower high, rolled over. Oat's been trending down. Wheat's been trending down. Softs trending down. Cocoa had made a run up. Looks like it's rolling over. Similarly with coffee. Lumber's been trailing down. Again, I've been watching the wood and cut ETFs, but again, if you can trade the futures, lumber's been trading down. Look for a bottom and a swing back up in lumber. See all the bonds, prices up, yields down. So we see again that very positive reactions to the CPI, the PPI. In my humble opinion, I think the yields, the decrease in yields probably was a little bit exaggerated, given that we're only going to get one rate cut. So I would not be surprised to see a correction like we got previously in bond prices pop up in bond yields again. Again, since we're only going to get one cut in 24, and the other cuts are going to be delayed. So I hope that helps. Again, DXY a little stronger, 105. Yen still, it's just finding a bottom every time. I'm guessing they try to do an intervention. It doesn't really hold. It retraces back down. That's probably a futures rollover. And then we got BOJ essentially on Friday. They made no decision. They didn't change their rates. They didn't change their bond purchasing. So as one commentator noted, they kind of punted down the road. So no change in the Bank of Japan's policy. So again, I think that's a future rollover. I think all these currency pop-ups are future rollovers. Again, weakness in the euro due to the political turmoil in the EU and in France. Okay, next we'll look at our ETFs Google Sheet. So as we just saw, potential opportunities to long or short, various index, topic, theme, etc. Then we can jump over to our ETFs Google Sheet, identify ETFs that we can trade either long or short that trade idea. So, and you can get 24/7 access to our ETF's Google Sheet by joining our Patreon, the All Access or VIP level. So we'll take a look at that in a second. Let me grab a quick drink. If anyone in the chat has a particular ETF theme, etc., you want to look at, please throw those up in the chat. We'll try to take a look at those. Okay, firstly, I wanted to take a look at one I added to the research sheet. As we mentioned, there's been turmoil in the EU parliamentary elections, additional turmoil in the French election. So I heard that the French stock market had dropped significantly, just like we saw in the Euro stock. So I wanted to see if there was any ETFs that we could use to trade France, the French markets. So I went to the ETF database, and the only one that I could find for France is EWQ, and that's a long on France. So we'll take a look at that, look at the risk reward profile in the research sheet. So again, I couldn't find any that were short France, just the one long. Couldn't find any on the French CAC market. So here is EWQ. Again, it's a long. It's not leveraged. It's just a long on France. We'll look at its composition in a second. You see the risk reward profile from a 52-week basis isn't real great. Doesn't have a lot of range in a short-term basis. And again, we'll see this in FinViz longer term, just over 2. So if I look at them in FinViz first, and again, you can access the profiles for the ETFs via the FinViz URL in our Google Sheet. So we see it had that precipitous drop again on that turmoil in the French elections. Does pay a small dividend, looks like a quarterly dividend, about $1.90 a quarter, much less in December. So it is optionable. Again, not a whole lot of range, 34 to 42. Pays a 3% dividend. Again, if we zoom way out, look at the monthly, so it's still relatively high, even though it had that drop all the way down to the longer-term moving average. Again, still relatively high. So not a lot of risk reward right now. Again, if you're a short-term trader, and that's one of the reasons I wanted to include that in our discussion. Again, if you're a short-term trader, day trader, scalper, you might find some opportunity trading EWQ. You can short this ETF. So if you're in an account that you can short, you could short this ETF directly. If you look at the composition, so it's got some Total Energy, Louis Vuitton, L'Oreal, Sanofi, so drug manufacturer, BNP Paribas, finance, banking. Also look at it in the ETF database via the link in that Google Sheet. Doesn't look like that's loading very well, does it? Okay, so right now it looks like ETF database having some issues loading. So, but again, we can see the profile in FinViz, and we can see the composition. And again, you can refer to the ETF database profile via the link in our notes when that's coming up. So I don't know if anyone's traded the French market using EWQ before. If so, please let us know in the notes, in our Discord, etc. So we'd love to hear your experience. What do you think of using EWQ to trade France? And again, we can keep an eye on that in the research sheet in our ETFs Google sheet. Okay, so if I go to the main sheet of our ETFs Google sheet, just quickly look through, see if anyone in the chat has anything in particular they wanted to look at. And we see some with Bitcoin and watching that BITI for the short. If it hits a BITO is the long. If it hits a max, looks like cannabis slowly coming down, but MSOX is the leveraged long. So you watch MSOS for a support or bottom. Again, China hasn't been as volatile lately as previous, but yin and yang. We talked about the pairs for the technology sectors, so LabU, LabD, SARC, etc. Talked about corn, some of the other commodities, so corn, copper, still again relatively high, not near its 52-week low. So some again short Europe, Euro, the FTSE Europe. You can use EPV, short, EURL long. Talked about FANG-U and FANG-D, so we see that exuberant new 52-week high in FANG-U. Financials look like they've been slightly rolling over. Gold, again, you can long GDXU, short GDXD. Silver, similarly, long AGQ, short CSL. We're still short both gold and silver right now. Industrials, we saw that slight retracement, so we're still long SIJ, which is short in industrials. Wood, again, still relatively high on a 52-week basis, even though when we saw lumber futures were down quite a bit. Natural gas, again, long oil, short KOLD, cold or long UNG. Again, we've got single stock ETFs for a variety of the stocks, NVIDIA, etc., both long and short. So if you're looking for a single stock ETF, you can do a find in our Google sheet. Again, palladium looked like it was down, but it's still not quite at its 52-week low. So, similarly with platinum. Talk about Mosaic tomorrow. We're watching that. Been watching the real estate market to see if there's opportunity there. Retail, again, we'll get retail sales data this week. We'll see if that has a negative impact on retail. Semiconductors, again, SOXL short, SOXL long, SOXL short. Solar, we've seen all that volatility in solar, so longs, tan or raise. Unfortunately, I don't have an ETF to short solar, but you could probably short using one of those ETFs. Tesla, again, we've got several single stocks on Tesla. We've got a number of bond ETFs, again, TLT, TMF long, TBT short, etc. So again, if you want to play the volatility in bonds, again, uranium's come down some, but it's still relatively high. So keep an eye, see if we get a further retracement in uranium and opportunity to swing that back up. India and Mexico we talked about last week, and India bounced back up quite a bit. Mexico dropped down further, so we'll be talking about MEXX again tomorrow, which is the long on Mexico. Again, we saw it made a slight correction, then trended back down. And we'll look at that again tomorrow. India bounced back up. Just checking the chat real quick. If I missed your ticker, please let me know. YTY. Sorry, Born. I'm not familiar with that. Is that a ticker symbol? Okay. Maybe I'm missing it. JAAA, Easy Mike. So AAA. So Easy Mike mentioned this JAAA, Janice Henderson, AAA, CLO. So it's a dividend payer, looks like about 25 cents a month. So it's a monthly dividend payer, about 6% yield. Performed positively for the year. Looks like a pretty tight range. It is trending up. So it looks like when they do go ex-dividend, it goes down to the lower trend line, bounces back up to the upper trend line, hovering above that on the moving average now. So again, if you're looking for a monthly dividend payer with a slow but positive upward trend, looks like it hasn't been around real long. It's got a nice upward trend. I very quickly see what their definition is. Floating rate exposure to high AAA rated collateralized loans. So loans, high quality. So yeah, the private equity type market or private debt type market. See what the composition is. Dollar, Madison Park, Wind River. So yeah, thank you for sharing that, Easy Mike. Again, if you're looking for a positively trending monthly dividend payer on private debt, that might be something that will be attractive to you. So yeah, thank you for sharing that, and I hope that all helps. Okay, let me grab a quick drink and we'll talk about our theme for this week, making money trading in the summer. Again, our theme for this week is making money trading in the summer. So we'll look at how the summer months tend to be for the stock market. So we'll go to this article in investing.com, open up the chart, the new chart for the monthly trends. Again, we've got now a breakdown for past 5 years, 10 years, 20 years since 1950. So if we look at June, again, June tends to be recently pretty positive. Past 5 years, past 10 years, very positive. Longer term, it was negative. July, again, even more positive. So even going back, to 1950 or so, July's always been a good month. So recently, June's also been a good month. And we talked about, catching that bounce into June from May. So again, up through July, we do pretty well. But then we get a, only slightly positive August. It previously had been negative. And then September tends to be generally bad. So September recently very negative, past 10 years significantly negative, and longer term negative. So summer months, June, July, generally good. August, okay, but a significant drop off, and then rolling over and going negative in September, and then a bounce up into the fall, into October. So again, so far, for the next couple months, things look positive. Then we get a drop off into August. Negative turns negative in September. So the historical data says long through July, short, into August, into September. So again, I hope that all helps. Also, they call it the summer stock market doldrums. You can hear what that means, how to trade the summer stock market doldrums via the link to our previous video on that topic. Again, summer tends to be lower volume, could be some more volatility just due to the lower volume, a lot of people on vacation, etc. So again, you can hear more about the summer stock market doldrums and how to trade the summer stock market doldrums via the link to our video. You can also find that on our channel. We've also got previous videos about how the stock markets perform in the summer and the best performing sectors and industries in the summer, so you can refer to those videos via the links in our note and also on our channel. And again, we've been talking about June, so you can refer to our previous videos on trading in June. And then as we enter July, we'll talk about specifically making money trading in July as well. So again, I hope that all helps. Again, I apologize for the slight delay getting onto StreamYard this morning, but I appreciate you all participating. I hope that you like this content. I hope that you find it helpful to make money trading in the summer and in any market conditions and any seasonality. Please smash the like button. We hope you're subscribed to our YouTube channel, and please share our content directly with your fellow traders. We want to keep building our BeachBum trading community for the mutual benefit of all of our BeachBum traders. I'd love to have you join us in our Discord. Continue our discussions. If you have any questions, comments, etc., put them in the comments of this video, also in our Discord. And again, we'd love to hear your recommendations for improvement for our weekly trading game plans, any of our other videos, tools, our content, our community, etc. Please let us know what can we do to add more value for all of our fellow BeachBum traders. So thank you again to everyone who participated and everyone who's watching after the fact, and have a great rest of your day.